down the trades that we have taken in February month. So these are the trades that we took. So if you look at it here, this is the first trade that we took, like February 3. We took a sale, and I'm going to explain this trade from the very basics. So if you look at here, the overall trades are based on our London sessions. All right, so we specialize on London as there isn't enough news at that time, so we can trade easily because of the less volatility on that session. So if you look at it, this was the first trade that we took, and let me level up this trade. If you look at here, this has created some sorts of resistance to the left. All right, so at the same time, if you look at here, you can see that this is the support, and this candle broke and closed above this resistance, means there is high probability that it will continue to push up. But at the same time, if you measure this range, which is all about like a 121 pips, means it's a way big move. All right, so what you can expect, we can expect at least 50% or let's say 40% of the corrections, as this candle already move up like 121 pips, means there is less probability that the next candle will continue to push up. So if you look at here, this candle closes like a bearish, means there should be a possible rejections at this point, and we should have to level up like this. It has created some sorts of a resistance. Now the fresh resistance is this on if you look at it here, the fresh resistance will be like on a 27.98. all right, so at the same time we can expect that some sorts of a retracement. That's why this candle, this immediate candle created some sorts of a wick, and then breaking the low of the previous candle, I thought that it will retrace somehow. So I just execute my trade like a 0.2 lot. So if you look at here, these are the single trade. All right, so 0.2 lot I executed after right breaking the low of the previous candle, waiting just for 5 minutes, and it pushes down. But I realized that it's a counter trend which has a lower possibility that the price would continue to push down. So I realized that this is something risky trade, so I should have to manage my risk at that time. So I managed the positions by closing 95% at the position at this point, let the rest run by putting my stop loss at break even. So if you look at here, this just went down and hit my break even. All right, so this is the trade that I have taken, like putting my 0.2 lot and getting $19-20. That's good anyway. So the next trade I took was at this point. So if you look at here, this was the chart. All right, so what you can see that this candle break the low of the previous candle, but it could not come down, means there is less probability that it will continue to push down, as it broke already the low of the previous candle, but there is not sufficient volume, so it does not grab any volume to down, so it continues to push us up. So at the same time, what I think was it's good time to execute after breaking the high of the previous candle, as the overall session trend was off. So this is higher and this one is higher low, so probably I will take an impulse entry. So I took an entry right at the point where breaking the high of the previous candle. So at the same time, there is some sorts of resistance. I immediately realize and book all the profit, as I don't want to take more risk at this point. So this is all about the trade, and even though I secure like a 10 pips, that's good anyway. So the next trade I took was this is all about like February 3. all right, so the next trade I took was at this point. Wow, that's a great trade. Anyway, I could not do more than 2 to 3 trades per day. Maximum trade I do was 2, but on February 3 I took 3 trades, so which is not good at all. But even though it is way to grab some sorts of positions while you getting a good positions. All right, so what you can see is this has created some sorts of a resistance, all right, at the left hand side, and this candle broke and closed above this resistance, means there is high probability that the next candle will continue to push up to fill the wick out to the left. All right, it's all about like 107, and you can easily expect like 50 to 60 pips, so for sure. All right, so what I did was I just execute my positions right at the point. If you look at here, after breaking the high of the candle. All right, so my mistake was at this point, I later on I realized that my mistake was entry was good, but the timing was not that much good. So at first it has created a small wick, then push up, breaking the high of the previous candle. I just executed, it went up and pushes down. So what I thought was probably it will create some sorts of market structures like a sideways market structures, and it will continue to push up like a range. I expected some sorts of a range at this point, so I closed my positions, but it was not the perfect time. If I waited for some time, then it will create. At first, if you look at here, the week was already been like 28 pips. It's a way big stop loss as well, so I should have to wait at first to create some sorts of a week, and then breaking the high of the previous candle. I should have to be entered at this point, but my entered position was a little bit earlier, which is not good at all, so that I secure my positions at this point. But later on I realized that the better idea to grab these positions was I should have to wait to create some sorts of wick at first, and then enter immediately after breaking the high of the candle. Then that will be my best idea by lowering my positions. So I think that will be the best idea to get this like all about 60 pips. All right, so 50 to 60 pips you can easily expect, while the range is 120 pips. And the next trade was I took was February 4, which was a good trade anyway, but let me explain the overall logics behind executing this trade. If you look at it here, the overall charts, what you can see is it has created some sorts of support at this point, and created some sorts of a resistance at this point as well. Likewise, this 30-minute candle, it's the whole trade was based on 30 minutes, so we have to be considered, because I was much used to execute on 30-minute chart. What you can see is this 30-minute candle having a strong bullish candle, means there is a higher probability that it will continue to push up till 60 pips. All right, so there is a clean traffic to the left as well till this point. So what I expect was probably the next candle will continue to push up to fill this wick, but at the same time I considered that there is a weak rejections like in a 23.6 pips, means it's a way big enough as well, and it has some sorts of rejections. So I executed my positions after breaking the high of the candle, all right, at this point, and secured all the profit, because I thought was no all the positions. I think 75% of the position I closed, because it was approaching to the weak rejections area as well. So I closed 75% of the position, put my stop loss at break even, and these are the trade. It will just hit my stop loss as well. So even though I got like a $19-20, that's enough in this trade. And the next trade I took was at this point. So let me explain the overall analysis behind this trade. Okay, write this trade. All right, so okay, if you look at here, this trade was also taken on London Open, so it has high volume generally. It has created some sorts of a support at this point, and if you look at the left, what you can see is there is a possible rejections and support at this point. All right, and there is another support at this point. So there will be the two range. All right, so what I expect was, by closing this support, 30-minute candle close like a strong bullish candle, but having a small body means I should have to wait it for the next candle to break the low of the previous candle so that I can enter like an impulse entry. So what I did was, this candle just broke the low of the previous candle, I just entered my positions as an impulse entry. And if you look at here, there is a way big rejections to the left, there is also a support, so that I close everything at this point by considering the fact that there will be probably rejections. And since it's an impulse entry, 17 pips, 17-18 pips, I thought that it was a good and a decent return as well, so I close everything at this point instead of letting the positions run. So I think it's a good idea anyway, because there is a risk at this left and there is a way big rejections as well. So the next trade I took was February 11, and this is also an awesome trade. So if you look at here, what you can see is this candle created some sorts of a support at this point. All right, at the same time it has created some sorts of a resistance as well. And if you look closely, the way this candle rejected from this level means the overall session trend is going to be down. That's why what we did the initial stages was, we waited for some sorts of a wick, and then breaking the low of the previous candle, we just took the entry by measuring the left. So what you see is, it's all about like a 40 pips, or out of 40 you can easily expect like a 20 pips. So I just execute right after this point, breaking the low of the previous candle, and secure everything at this point, considering the fact that it has a choppy market at this point, ranging. We moved up initially, we broke down and continue to push down, means it has some sorts of a risk and not a confident trade as well. So I close everything at this point, and I got like a 98.36 USD profit at this week. Within a week, I think it's a decent amount. My account was like a 2848 now, 2948 USD. That's a good anyway. I used to leverage like 1:30, means is decent. This is all the trade that I took the February month, and I could not able to do the trade last week because of my personal works. So I will let you to post my videos like this on each week from now. So hope you guys will enjoy this. And it's all about managing risk, executing 2 to 3 trades per day. That's enough. And do not take more than 2% risk per day, because if you took much risk, then it will just lower your emotions down as well. So if you want to be stable on emotions, then you have to execute 1 or 2 trades a day, and do not go on an over trade. So that's the cases. And the most important thing is, do not execute the trade haphazardly, because if you get a good market structures, then you will be hesitate to execute the trade, as you have been already been like 2 to 3 trades. So that's not a good idea. So we have to be wait for a perfect structures and execute, and side by side we should have to be manage the risk as well. So this is for today. Have a great weekend. Bye bye.